In this video, traders, we're going to look at the CoreSpreads Australia loyalty scheme. Stick around. Hey traders, a warm welcome to you. Alright, so this video is sponsored by CoreSpreads Australia. There's a link to those guys in the description below. If you want to check them out, hit that link, go and have a look for your spread trading. But in this quick video, I want to run through the loyalty scheme, which is effectively a rebate scheme where you are paid money back for your trading. So great news for retail traders if you're opening an account with CoreSpreads Australia. Okay, so how does it all work? So if you can think of it like kind of like air miles, I guess. So the more you use a company, i.e. the more you use an airline, and the more you spend on the ticket, so you get business class, you get more air miles, you go first class, you get more air miles compared to economy, and the further you fly, the more air miles you get that you can then redeem for various things. Similar kind of thing here. So to reward your loyalty and your trading, you're going to get what's known as core points. So the more you trade, the more frequency, and the bigger size you trade, the more core points you're going to get, which eventually means more money coming back to you. Have a look at run through an example in a moment. Okay, some major things are you get up to 25% back. It's a tiered system. We'll have a look at that in a moment. You can get up to 4,500 Australian dollars back, which is pretty big. You're going to be trading a lot of size for that, but we'll look at that in a moment. Auto enrolled in, so as soon as you open a live account, you're into this loyalty system. It is kind of auto enrolled. You can withdraw or use the funds. So many of these schemes, you're stuck with it. You've got to use the bonus. You've got to use the bonus. You can take it out and buy something with it, or you can leave it in as trading funds, up to you. Core points equals rebate. We'll look at that, or how it all works, say in a second. You get some rollover benefits. So what is good about this, and perhaps not others, is that some of the other rebate schemes is you trade actively in month one, you get a rebate, and if you don't trade at all in month two, or you trade less in month two, your rebate kind of tier is lower. Now with this, some of your points are rolled over. There's a decay factor. Again, we'll run through an example, but ultimately it means that, it's like a trading, guys. You might have a really active month, market might be going crazy, really volatile, you're all over the place, you've got crazy number of volume trades, you've done really, really well, you've just been in tune, you bang, 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 good size, good number of trades. And then the next month might be quiet, so you're backing off the throttle, you don't want to press too hard, you don't want to do any damage to those gains. Now, from the rebate perspective, you are still going to get some benefit from that active month. It's not going to reset you at zero. Some of those points are going to roll over, those core points will roll over. With a decay factor, it decays by a third, but we'll look at the whole process in a moment. But it does mean that it actually kind of averages out a little bit better. It's not like really active one month and then nothing the other, and you get no benefit for that moving forward. You do. What I want to point out, guys, before we move on, yes, this video is sponsored by CoreSpreads Australia. However, this channel is to make you a better trader, to make all of us a better trader. One thing I want to point out is that do not trade just for rebates. Do not look at the rebates and go, oh, well, if I trade actively, if I trade in size, I'm going to get more rebate. Yes, that's true, but you shouldn't let it dictate your trading. We do not want to overtrade. So that's the frequency of the trade. And we do not want to trade too much size that's outside of our risk parameters. So that's the size of the spread trade that we're putting on. So just be mindful of that, guys. Treat this as a nice extra if you get something and how much you get. Do not use this as a reason to trade. It's just a warning because, guys, yes, the good guys over there at CoreSpreads Australia are sponsoring this video. However, we want to make sure that we're in this game for the longer term. We want to make sure that our accounts are long lasting. So don't overtrade, don't trade too much size. Treat this as a bit of a freebie if you like. So with that being said, let's move on. So let's look at the structure. So $1 is 1 core point. So let's say you trade the Wall Street 30, it's a 1 point spread. Over at CoreSpreads Australia, let's say you trade $10 a point. That would equal to 10 core points. It's 5 in and 5 out, by the way. So an open position, it's 5, close it again, it's 5. So you get 10 core points for that. So you can imagine if the spread was 5 and you're trading 10, you get 50 core points. If the spread was 1 and you were trading $100, you get 100 core points. I think you get the idea. Okay, so how does it all work out? So it's a tiered system. I've not put the whole table on here because it's quite a long table. It's structured that 0 to 100 points, you don't get anything back. From 100 above, you get a tiered rebate percentage. 1% going all the way up to 25% if you've got 35,000 core points. But it's quite nice because it goes 100, 200, 200, 300, 300, 400, 400, 500, 5 to 750, I think 750 to 1,000, and it goes up by 1% each time. So it's quite good. It's not like you have to do millions and millions just to get a little bit back. It starts rewarding you quite early on, and the scale is skewed to the downside so that a little bit more, you do get a little bit more back. All right, so let's look at a quick example. But the big thing is, guys, you know, I can do an example here, but just for clarification, if you want to go and check them out, we'll put a link in the description below so you can see how it all works. And like I say again, don't worry too much about, oh, how many points exactly am I going to get? You know, am I going to get back? Just treat it as a nice little extra. At the end of the month, you get a little bit of rebate if you're trading, working out, but just trade normally and structure them within your plan. All right, so let's check out an example to see how all this would work. Like I say, don't get too caught up in trying to be very precise about how much you're going to get and what you're going to trade and etc. I think the best thing to do is just trade your normal way, and the money that comes back is a nice bonus. But that being said, let's look at an example. So month one, let's say you trade $550, and that's 550 core points, and that's going to be made up of the spread, the size, and the multiple. So let's say you're very, very actively trading the Wall Street 30. That could add up to 550. Let's say you're trading it a few times. Let's say you're trading some exotic pairs, wider spreads, after hours, bigger size. You get the idea how that's made up. So that's putting you in the 5% bracket. I've not got it on here, but go and check it out. There's a link in the description below to see the full tier. Month two, let's say you trade $425, 425 core points. What are you getting back? So how it works is you're getting the month's action multiplied by the tier that you were before. So I've done a little table here, and it's not the best table, but stick with it. Month one, you've got no core points, just open the account. You make 550 points in your balance for the $550 with the spread and etc. You don't get any depreciation. Now in depreciation, you lose a third of the points balance from the prior month every month. So the next month you lose a third, next month you lose a third, next month you lose a third. So, but that's only for that month. The next month after, you lose a third, you lose a third, lose a third. So you don't lose it on the whole balance. It's just kind of erodes away slowly from the month. So you're still getting credit for it. It's why you get a bit of rollover credit. It doesn't just go to zero, but you lose a third, lose a third, lose a third, lose a third, until obviously it goes down to almost nothing. So this is what we've got. So we've got 550 points closing balance, rebate of zero, because you get nothing for that month. The next month is when we start making the money back. So month two, we're going 550, okay, rolled over, points earned 425, depreciation of 183, that's a third off that 550. Closing points 792, but we're making the rebate 5% rebate from that month's activity, because it's the points, the total cumulative points, that give the percentage rebate, but the activity is what give us the actual money back. And the activity was 425 times by 5% is $21.25 back into the account. Okay, and now we can start seeing it more and more and more, and you can see how it starts to grow. So month two, we rolled over the points, 792, open that. We've traded £780, let's say on month three, 780 core points, been active a month, lots of stuff going on, plenty of trades. We've lost 325 in depreciation, which is a third again off month one and a third off month two. So we've got a bit of depreciation there. Total points 1246. That brings us into the 6% band. So now we're starting to get a little bit more, and it's 6% of the activity we had in that month, which was $780. 6% of $780 gives us $46.80 back. And you can see how this starts to accumulate. So the more and more you trade, you start to go up and up the rebate bands, but you're still getting rewarded for the activity. So let's say you're going on and on, you've been trading for 12 months, you've probably got a lot that's rolled over, rolled over, rolled over, you're going up in the bands, your loyalty is being rewarded for trading with them a long time, and then you have a very, very active month, and you do 7,000 core points, say, then you might even find yourself in like a 10% band, and so you're getting back a decent chunk of money. So the longer you trade with them, the more you trade with them, the more you're going to get back. But like I say, you know, make sure you're sticking to your trading plan, not taking on extreme risk just to get rebates back. But it's a nice little extra that comes into your account at the end of the month. I think it's paid at the end of the month, or it might be paid like a couple of weeks after. I say go and check it out. And also terms and conditions, all that kind of stuff. Check them out before you decide to open an account and trade with CoreSpreads Australia. That's it, guys. Take care. See you next one. Bye-bye.